What are the top 10 CoveredCall ETF dividend streaks here in Canada? I've gone through over 100 funds to get you that answer. So we are trying to find the most reliable, consistent dividend payers, those who have either maintained a consistent distribution or from a particular point in time have grown it over time. So there's definitely that mix. We're just focused on, in this video, the length, a classic, just top 10. We're going to be starting with number 10, and then we will go all the way to number 1. And then at the end of the video, I encourage you all to actually stick around because I'm going to show you, especially for newer income investors, how you can actually invest in some of these reliable, consistent payers in one location where you don't maybe necessarily have to invest in 3 or 5 different funds at one time. So let's go through it. On each fund, I'm going to just spend just a short moment just going through what the strategies are, the management fees, the yield, and assets under management before we move on. Okay, so the first one we got is Life, the Evolve Global Healthcare Enhanced Yield Fund. It's got a distribution yield of 9.35%. It's got a healthy AUM, assets under management, for a Canadian fund at $250 million. It has a management fee of 0.45%, which is actually pretty good for a CoveredCall fund. And it's been paying out a consistent dividend for 56 months or 4 years and 8 months. Okay, in the number 9 slot, we are hitting up Brompton. Let's head over to Overview just to start. Now, its target yield is about almost 7%. As you can see, it's active with CoveredCalls, of course. These are all CoveredCall funds. It's got a management fee of 0.75%. So you'll notice that with other Brompton products that we're going to cover, they all have the same management fee. Then as we go over into the geographical and sector allocation, just wanted to remind you guys that this is probably the only fund that I'm aware of that actually combines just financial companies like Canadian banks, Canadian financial services companies with companies like JP Morgan Chase, Bank of America. Anyways, this fund has $41,700,000 of assets under management. Of course, the bulk of the geographical makeup of this fund is in the United States, with a little bit in Canada, of course, all financial services. And it has been paying out a consistent distribution for 61 months, 5 years, and 1 month. Next up is another Brompton fund, the Brompton Global Dividend Growth ETF, with a current yield of 7.74%. Of course, it has that management fee of 75 basis points. Assets under management, which is you know what? It's still very liquid for a Canadian fund, just almost touching $82 million. Of course, with it being global, the bulk of its fund is situated in the United States, with another big chunk here in Canada, and of course, others spread out throughout Europe and a small touch in Asia. And then we can see over here the sector allocation, just a big bulky mix of course, financials, technology, and energy, which is actually part of my own strategy. I have 4 sector funds that I feel are probably the most important here in North America, technology being very central to America, financials, energy, and actually utilities to Canada. And this one, BDIV, has been paying out for also, similar to BFIN, 61 months, making it 5 years and 1 month. Okay, in the number 7 slot, we got another Brompton fund. You can see that this is starting to become a trend here, but with EDGF, the Brompton European Dividend Growth ETF, in the number 7 slot. It has total net assets under management of almost $20 million. Of course, it has that 75 basis point management fee. Of course, situated in Europe, the big chunks are in France, Great Britain, Germany, Of course, the big three there, and just a whole host of different sectors. It's always kind of interesting going through these funds and seeing which ones are kind of the top ones. Of course, in Europe, an industrial manufacturing hub there, and none of its funds touching 5% for allocation. And this fund, EDGF, has been paying out for 65 months, good for 5 years, 5 months. Okay, so next up in the number 6 slot, we got Hubble, the Harvest U.S. Bank Leaders Income ETF. This fund, has a current yield of 11%. Again, net assets under management of $83 million. Of course, all these funds actually pay out monthly, so nothing to worry about there. There's no quarterly payouts for anything that we're covering. And it has a management fee of, I believe, it's got a management fee of 0.75, very similar to the exact same as the Brompton products, and it has a high risk tolerance, mainly because I think of just the rocky road that is the U.S. banks currently, and with what we saw earlier this year. Okay, so nothing much more to see there. It has been paying out for 67 months, good for 5 years and 7 months. So at this point, if you've stuck around long enough, again, thank you. If you haven't hit subscribe yet, please do so if you get value out of this content. It does help a great deal. And stay tuned for other awesome CoveredCall ETF news, new funds, other strategies, tools that we talk about here on this channel. And also too, as the recording of this video, I also offer free, one-on-one coaching. I don't try to sell you anything, no courses. I make nothing on this channel. I want to understand the people who are watching this content and just interact with you all. And especially if you are new and trying to figure out what all these funds really mean, I want to connect with you guys and understand what your pains and problems are. So hit me up on it. I'll provide the email, both in the description. I'll just put it on the screen here as well. And I've also created a new Reddit community, just CoveredCall ETF. So if you head over to Reddit or you download the app, then you can just look up CoveredCall ETFs, and I'm the moderator of that community. So with that being said, let's head back to Hubble. Now, one thing I didn't mention is, and I believe the Brompton products I didn't as well. Hubble, they typically write 33% on the portfolio, and they typically write either at the money or out of the money. That is the typical harvest strategy. There might be like 1 or 2 outliers in their funds, but that seems to be the overarching strategy. Now, getting back to the Brompton funds, we're kind of looking back at the European dividend growth. One thing I didn't mention was the fact that Brompton is actually pretty open about how they write cover calls on their funds. They're actually pretty open with, it could be 5%, it could be 95%. They could do at the money, out of the money, in the money, all over the place to achieve the target aims of each fund. Okay, so with that being said, let's head into the number 5 slot. We've got HGR, which is the only, as far as I'm aware, the only REIT, CoveredCall ETF here in Canada. There used to be a second, which was BILT by Evolve, but that fund actually went defunct, so leaving HGR as the remaining fund. Okay, and this has been paying out for 75 months. Again, very similar to Hubble. It writes 33% on the portfolio, and it's at the money, out of the money, depending on the fund manager. It's got a small AUM of almost $11 million with a yield of 10.29%. And actually, the management fee is different from Hubble. It's got 85 basis points compared to 75. Okay, in the number 4 slot, we got BNC. And this fund basically just takes care of the big 6 banks here in Canada and financial services here in Canada. So about 10 funds, small AUM of 8 million with a yield of 6.84%, and it writes up to 25% of the fund. Active cover call writing strategy of up to 25% of the portfolio enhances income and reduces risk. But if we go over to portfolio breakdown, it's more like 50%. Apparently. So I don't know what it is. Maybe it's 50, or maybe they are kind of more active. Maybe they try to stay within the 25%, but I'm not sure what to make of that. But again, for that kind of coverage, and of course the management fee of being 0.55%, it's been paying out for a while, 84 months, which is good for 7 years. But I feel like this yield could certainly use a boost, with, especially if you're getting that kind of coverage, like if it is 50%, and with that kind of yield, it must be well out of the money, well out of the money. So you'll get a lot more participation in the price, but I think, again, if you're an income investor, you're probably looking at other options. Okay, so in the number 3 slot, we got another Brompton fund, which is the Brompton Global Healthcare Income and Growth ETF, with a distribution yield of 8.62%. Again, 75 basis point management fee. It's got $49 million of assets under management. And of course, with being a global healthcare leader, I'm not surprised that a major part of it is in the United States, 83%. That's where most of the patents come out for the globe anyway, is out of the United States. Okay. And they've been paying out for a staggering 99 months, good for 8 years and 3 months. They also actually have, forgot to mention with some of these funds, but some of them do have like a US dollar version of the fund. Okay, so going on to number 2, we got HHL, the Harvest Healthcare Leaders Income ETF, with a staggering assets under management, $1.3 billion. It's just a monster when it comes to, of course, this sector and assets under management, with a current yield of 9.6%. Again, 33% coverage, at the money, out of the money, at the discretion of the fund manager. Not much more to really see there. Actually, maybe we can check out, and it's got a management fee of 85 basis points, medium risk. Okay, so now that we've checked out that, what I forgot to mention, most importantly, being in the number 2 slot, it's been paying out for 105 months, good for 8 years, 9 months. So well done, Harvest, for those products. But in the number 1 slot, just as you saw in the thumbnail, good for 150 months, which works out to 12 years and 6 months, is TLF, which is the Brompton Tech Leaders Income ETF. So bravo on Brompton, honestly, for the success with these funds. By the way, for those who maybe are unaware, Brompton's actually been around, I believe, since the year 2000. So they've, as a fund manager, they've certainly had a lot of time to mature. That's roughly around the same time, actually, Questrade was founded in 1999. But this is a fund that has been around for a long time. Again, 75 basis point management fee. As we head down into the sector makeup of the tech leaders income fund here, no surprise, like 95% in the United States, with some of the suspect tech leaders, the big tech giants that we see here. And total net assets under management is almost at $90 million. This is just an incredible fund. And, actually going through all these Brompton funds, it actually gave me quite a deeper appreciation for Brompton as a fund manager. I think in the income investing community, I would say that Brompton kind of just comes across as like not really all that exciting. But what is exciting about Brompton is just the fact that they have all these funds that have paid out so reliably and consistently for so long. So I wanted to actually offer you guys a chance that if you are interested in some of these Brompton products, there is a way to invest in all of them, which is BMAX, which is advertised as Canada's first enhanced multi-asset ETF, simply meaning as a multi-asset, it invests in fixed income, it invests in split share, preferred shares, and everything else is kind of just multi-sector stuff. But what's so cool about it is that all 5 of those funds that we've covered in this video are inside of this ETF. So it's an all-in-one fund, an ETF that invests in other ETFs. This is a fund I own. It's about 10%, works out to about 10% of my TFSA. I've chosen to break down my TFSA, as I've shown in a prior video, of basically 10% across the board for all the funds in there, whether it be just one sector or an all-in-one fund. But again, I have a much deeper appreciation for this fund. It has a yield, oh my goodness, like 10.64%. I probably bought this fund when it was slightly under 10. My target yield is above 10, but I just liked BMAX so much that I was willing to make that exception for a fund like this. Again, reliable and consistent, and takes advantage of, like, in troubling times, BMAX I'm not worried about. It's probably the one I'm the least worried about, especially because the underlying assets have actually been around for so long. BMAX has only been around for maybe just under a year, I want to say. I'm actually really curious now. Been under, where is it? Oh, there we go. October 20th. So yeah, 1 year. Management fee, it says 0. That's because like it's using its own ETFs, and so you get the management fee through the underlying ETFs. So that's one thing to keep in mind with all-in-one funds, is that you might see like a 0 management fee for some of them, but it's the underlying management fees that you're still paying. Now, to get it to a yield of 10.64%, you might have noticed with some of those other funds that they were, maybe 6%, 8%. This fund actually uses 33% leverage. Where does it say that? It does. Here we are. So it uses 33% leverage to get it to that point. So again, if that might be a turnoff for some investors, but it isn't for me. I'm going to hold it for the long term, so I'm not worried about holding that leverage. I just really like the funds that it holds. And again, if you wanted maybe something similar to some of the harvest funds that we covered, there's HDIF that holds very similar to BMAX. It holds these 3 harvest funds that are in the top 10 CoveredCall ETF dividend streaks that we've covered here. And you can pick those 3 funds up plus more inside of that fund. But nonetheless, BMAX is the way to go if you're looking to, I think, in my opinion, probably a good pickup right now, especially because it is over that it's over 10% currently. And so far since its inception, it hasn't been. So let me know what you all think in the comments below. Do you agree with the analysis that Brompton is maybe not the most exciting fund, but what is kind of exciting about them is that they have these dividend pairs? Do you have a deeper appreciation for Brompton funds after a video like this? Let me know in the comments. Be really curious to know what you all think. And of course, again, if you like what you saw, hit all the buttons of the like and subscribe variety, and I will see you all in the next video.